What is up, traders? Hope everybody's doing well. Today's lecture is going to be about the lower time frame bias or intraday analysis. I might split this lecture into two or maybe even three because this is where it starts to get not complicated but more in depth, and we start to add multiple factors, multiple things together to kind of gauge where the market wants to go. All right. So I'm going to start off also from the daily because this is when you go into any session, any week, any day, you always want to start off from the higher time frame. So the daily chart here, we can see, I said from the last lecture, we're going to look at this portion of price action and upwards. So in this lecture, I'm going to cover the 1 hour time frame, the 15-minute, and then maybe the 5-minute, or I might leave the 5-minute and the 1 minute for a separate lecture. Okay, so I don't kind of jam you guys with information. So we can see here how price generally was in a bullish trend, obviously, right? We swept this high, cool. We have a retracement to equilibrium, right? This is me coming into the week or the day, whatever, and kind of trying to get a gauge on where price wants to go. All right, cool. If we go to the weekly chart, we can see how price did sweep. All right, cool. Retraced, and it didn't retrace lower than this candle, right? It just retraced to around equilibrium of this candle. Okay, so on the weekly chart, we did sweep. This is an order block. We're in it right now. We might see price lower. We might see a continuation up higher. But as of right now, we're in a bullish order block in an uptrend. So I'm kind of maybe leaning to a little bit more bullish. But I'm keeping in mind that we do have equal lows, right? We have this low here. We have this low here, right? So it's equal lows. So price or market might want to come down, sweep them, and then continue up higher. It's reasonable. I'm keeping that in mind. But as of now, from what I'm seeing, right, I'm anticipating the next week to maybe be a bit bullish because we're in a weekly order block, in a bullish trend, right? We've come down and closed in around discount of this previous leg. All right, cool. We go down to the daily chart. We can see how we're in equilibrium. Okay. We're in a buy side imbalance, sell side inefficiency. Busy. We're in an order block right here. Beautiful. So we could anticipate price, if it starts to show bullish signs, that we're going to continue up and target this high. Or if it maybe inverses this daily, if it starts to impulse lower, we might want to target these equal lows, which is very, very reasonable. Then target this inefficiency right here because there's a lot of sell side resting here. Cool. Drop down to the 4 hour. On the 4 hour chart, we can see here how price came down, took out this sell side. So it took out some sell side. Still a lot resting here. We've came down to equilibrium as well. Quite impulsively, like we came down strong. So that might be an indication that we might want to continue lower. Interesting. So the higher time frame is telling me that we're a bit maybe more bullish. Now on the 4 hour, it's telling me that we might, as of right here, might have a retracement that continue lower and tap out to these sell sides. We might, but we're still kind of trying to go down slowly, right? So here on the 4 hour, we've tapped into this inefficiency right here, right? After taking this sell side, cool. We're in a bullish structure, right? We've breaking structure here, cool. We're in discount, cool, and inefficiency. So for me, if we inverse this inefficiency on the 4 hour, we might anticipate lower prices to maybe tap into this inefficiency, this order block, and then from there maybe see if we have a rejection or if you want to sweep the lows, right? On the higher time frame, we see an impulse away from this inefficiency with this fair value gap right here. See this fair value gap with this fair value gap right here. I'm gonna put that in, send that like this, and put it in a green color. I'm gonna now go down to the 1 hour time frame, okay? So 1 hour time frame here, we can see here how price, I'm gonna move this just for now. We can see here how price didn't break structure yet on the 1 hour time frame because the high is still here. So on the 1 hour time frame, we're still not in a bullish trend. And we're not in a bearish trend because, or we're not in a continuation for bearish because we still haven't closed below this low impulsively. So on the 1 hour time frame, we're still kind of in a range. Once we respected this 4 hour right here and also this 1 hour and pushed up impulsively, we might want to, it's reasonable to expect price to maybe want to push up to sweep this buy side. We respected it initially, didn't sweep, rejected heavy, inversing this gap, right? We can see here. Inverse the gap and put it in, no, let's see, black, right? Inversed it, respected it as an inverse, and then price pushed lower. Cool. Very important point here. Yes, this was a very impulsive candle down. But number one, do we have a close below this low? This low. When I want to see a break of structure, I want to see a close below the candle. Cool, it broke structure. But when I want to see momentum, I want to see a close below the wick. Those are very different things that you guys have to know. Yes, we broke structure here. Cool. But if I want to see momentum, I want to see it close below both the candle and the wick and with an impulse, a fair value gap. Do we have a fair value gap here and a close below the wick? No. What happened was a wick below, just like on that daily chart, right? But this one is a bit less intense. We have a wick, and then we closed, filling this what could have been an inefficiency, but it's not, right? And then the very next 1 hour candle comes back up and respects this BISI, which was inversed initially and respected as an inverse. So it respects it as a BISI, which can happen with fair value gaps in high resistance liquidity runs or in consolidating markets, which we can clearly see right here. In this portion, we are clearly consolidating. We're not really going anywhere, right? Price is just going up a little bit, not going high, sweeping, going up, making these wicks, not sweeping this high, then sweeping, then coming back down. So it's really just in a consolidating market, really. You can see here, right? So you can see how fair value gaps in this consolidating market do get disrespected and re-respected a lot of times, right? Like this is an example right here. You have this sell side imbalance, buy side inefficiency. It was respected here, barely. Then it was inversed here. And then price really just consolidated in it, and then it pushed. So it really wasn't a quick push up. So we can, on the 1 hour time frame, identify from this kind of movement that right now we're kind of in a consolidating range where we might want to take out minor buy side and minor sell side, might. But when we're trading on the lower time frames, this gives us an indication that when we're trading on the 1 minute, 5 minute, that we really don't want to be shooting for these highs too much or these lows too much. What we really want to be shooting for the most is inefficiencies in these legs, right? Inefficiencies in these legs, which we can see are being hit a lot because it's a consolidating market. So that's the difference, and that's kind of what you gain from this, from knowing this is, okay, on the 1 hour time frame, which we're getting closer to the 15-minute, the 5-minute, the 1 minute, we're in a consolidating market generally right here, right? On the daily time frame, we still don't know. Is this a retracement? Do we want to continue up, lower? We don't know. But on the 1 hour time frame, because I'm trying to trade intra-session, right? So I see here that initially we respect this bullish fair value gap, and it's a 4 hour push up impulsively. Then we disrespect it. Then we re-respect it. Okay, then we come back down. Kind of really we don't do much. We kind of come back to it a lot, right? We can see here how price comes down to it a lot and taps into it a lot, wicking below it a lot, right? When we're in a high or a low resistance, not high resistance, price, like the breakaway gap that I showed you guys, price will just leave fair value gaps untapped into, or at least the upper half or lower half untapped into, depending on what the fair value gap is. So in these cases of how we're just completely overlapping, closing below sometimes and wicking below completely, it just tells you that we're not really in a rush, at least now, to go anywhere, right? Until on the 1 hour time frame, I'm gonna take this off. We have a breakup structure. Where is that breakup structure? Right here, right? Not here. It's technically right here. The breakup structure happened right here. I'm gonna put it right above the wick. Try to get it correct. That's right, boom, right? For me to get a valid breakup structure, I want to see it close above the wick, not just a candle. Okay, above the candle, it's a breakup structure, but for me to see strength with that break, I want to see a breakup structure with an impulse. I want to see strength above that high for me to get confidence that, okay, we're going to go in that direction. Okay, and not just sweep and go lower like here, right? So, and like the weekly time frame, like like here, where we just completely just swept and continued lower, like here, right? I want to see an impulse away to show me. And guess what? We did have it here. We gapped. This is a new week opening gap, I believe. Right, let me see. What is this? This is right here is 22nd of November, 24th. Yeah, so this is a new week opening gap. And we impulsed higher, or we gapped higher. That's showing me that we're in strength now. So now, since we're in a bullish trend on the 1 hour time frame, I'm gonna take equilibrium and see where price might want to come back into and fill. Right now, since we are generally in a range here, so when we're looking at discount, mainly you want to look for order blocks or past inefficiencies that were respected a lot of times. And in this case, we can see that, for example, this inefficiency, extend that through in time, where I'm looking for this to be re-respected, right? Or disrespected again as an inverse, come back, tap into it. And we can see how it was tapped into it actually twice here. So now we're in a bullish trend, okay? We have this volume imbalance, or this liquidity void actually, which I want to see price, like, there's nothing 100%, but as close to 100% as we can possibly get in trading, come back and fill it, okay? So when we opened here, my bias now, yes, we're bullish, but I want to come see this filled, okay? So on the 1 hour time frame, it's the first indication that we might be bullish now, okay? So I'm looking for a nice region in the discount to see price push up from, or if we're here and I'm looking to trade the market, I want to see if we could trade it short and to this discount. And if we're in shorts, I want to be taking profits at around this region. Ultimately, if you look, we have this portion of this liquidity void in discount, right? So I want to be trading or just around this area in general, okay? So now that we've confirmed we are in a bullish trend now on the 1 hour time frame, what does this drop? We look at it. Does it have meaning? Is it a shift in structure? Does the market want to continue lower now? Or is it just a sweep for us to continue higher? Well, let's look at the factors. Did we impulse below this low? And this wick, no, all we have is a wick. There's no candle with a fair value gap for us to come back and then continue lower. We don't have that. It's just a wick. And we closed within the range. All right, let's see what happens next. Price a bit consolidates, and then sweep some more sell side. Again, the same thing we're seeing here, right? We didn't impulse below this low, just a wick, just taking sell side, just gathering energy. And then, look at this. This tells you we're in an uptrend. We break structure right here. But before that, we break internal structure with impulses, okay? And if you want to go bullish here, well, this just tells you that we're bullish. We just broke structure above all these highs, or we can look at the swing high, for example, which I'm going to take this high, right? Which is, you can look at this, like you have this wick is higher than this, but in terms of the swing high, I'm looking at the candle, right? So I'm looking at, this is the highest. So I'm going to take that wick, extend it, and you can see how we clearly just fucking impulsed. And we can see how we just clearly impulsed away and then came back, tapped into that gap right here, continued higher until later on we shifted right here into a bearish trend, and then we shifted back into a bullish trend, we can see here. And then that's when we've just been in a consolidation basically since the beginning of this year, basically just going nowhere. The major highs and lows have been still intact, you can see here, but it will eventually be broken. I do expect, or I want to see how price, since now we've taken this sell side, let's zoom in. We're on a 1 hour time frame right here, right? Since we've taken this sell side kind of with a strong leg down, inversing this gap, I want to see how price, we have this daily inverse, right? I want to see how price, if it wants to respect this daily inverse, comes up to it. And then if price starts to show signs that we're going to continue lower, sweep this sell side. Then after we do, I want to see if price is willing to come down and sweep these lows, this low, and then ultimately this weekly low. So, but we're in a range right now, so we're going to have to be very cautious, not really aiming for much on the lower time frame as well. Just session highs, session lows, which we've talked about, and not really aiming for all-time highs or these major lows, because we're clearly in a consolidation, which we can see on the 1 hour time frame, 4 hour time frame, daily time frame, and even on the weekly time frame, right? So that's for the hour time frame. Now, in terms of the 15-minute time frame, I feel like I'm gonna leave the 15-minute time frame, the 5-minute and 1 minute together, because in my opinion, if I were to use one time frame for scalping, it would be the 15-minute, because the 15-minute is not too high of a time frame to where you have to wait 4 candles for 1 hour to print, but it's not too long, it's not too short to where you can get faked out, right? So I'm gonna leave the 15-minute time frame with the 5-minute and 1 minute, right? This is probably gonna be a 3, 4, 5, 6, maybe even lectures for the bias, because this is the most important thing, right? For you to determine bias, it's the most important thing. So we've done the daily and weekly and the 4 hour. We've done the hour, right? Now I'm gonna drop down to the 15-minute, 5-minute, and 1 minute in the next lecture. They may be in one lecture, they may not be, I don't know, but I'm trying as much as I can to just simplify it, right? And I don't want to put too much information in one lecture so you guys don't get overcomplicated or overwhelmed by information. So I'm going to leave it at the 15-minute right now, the 1 hour, sorry. The 15-minute is going to be in the next lecture with maybe 5-minute. I may include the both because they're also pretty similar together when you compare the two. But yeah, hope you guys found this insightful. If you got any questions, feel free to shoot them. And until next time, stay safe and happy trading.